Hey everybody, Economic Ninja here. We're going to be talking about inflation, we're going to be talking about taxes, and we're going to talk about how inflation is going to affect your taxes in 2022. Let's do this. All right, so let's talk about this. In November, inflation rose 6.8% from a year earlier. Absolutely huge. Nearly a 4-decade high as measured by the Labor Department's Consumer Price Index. For new cars, they're up 11%, and fast food restaurants up 7.9%. So to say that we are seeing inflation rising is an understatement. And is it going to get better anytime soon? I don't think so, because of some crazy stuff the Federal Reserve's doing. By the way, real quick, if you like this conversation and you like these videos and you've been watching me for a while, if you would consider subscribing, I'd really appreciate it. All right, let's talk about stocks, because stocks have been slipping. Stocks slipped after the job creation falls short. It says because of differences in inflation adjustments, some taxpayers will feel the inflation impacts more than others. This comes from Kyle Palmerloo. Read the article and then get back to me. A senior fellow at the American Enterprise Institute. It says inflation indexing was enacted in 1981 after years of inflation as high as 14.8%. While taxpayers' income has risen with inflation, tax brackets remained fixed. As a result, people owed higher taxes due to normal but not real increases in income. And that is absolutely, everyone, what we are seeing today. And to give yourself an idea of how bad this can get, with November's numbers or December's being at the 6.8%, or November's, but yet we saw 14.8% back in, was it 1981? That means that we have so much more to go. And back then, we were not printing the amount of money that we are today. All right, so it says, responding to pressure, Congress indexed the income tax brackets and some other provisions for inflation, but lawmakers didn't index all tax provisions, and since then, they have chosen to adjust some new ones for inflation, but not for others. Let me give you a couple examples. There's two key provisions for home buyers and sellers lack inflation adjustments. The $750,000 cap on total mortgage debt, for which interest tax is deductible, enacted in 2017, and an exemption for $250 of profit for single filers and $500,000 for married couples, enacted in 1997. This means home prices have gone up. So when you want to deduct your mortgage on a $750,000 house, but if you buy a house that is $800,000, you're only able to deduct the interest that you pay on the $750,000, not the additional $50,000. Well, in California, you can buy pretty much a house this big for $750,000 because inflation is rising. So there are a lot of people that are missing out on that tax write-off. Also, with the capital gains, $250,000 for single filers, $500,000 for married. Well, in this day and age, when you're selling your house for more because of inflation, you're missing out on a lot of tax-free profit. So that's very important. Excuse me. So that is a really big deal. Now let's talk about wage earners. Many wage earners will see take-home pay bump up in 2022. This is according to Curtis Tatum, an executive with the American Payroll Association. We've seen this before because we've seen restaurants have to raise their wages just to be able to get qualified people in there to work. So they're having to raise their wages just to get that to happen. That's because the inflation factor used to adjust to federal tax withholding tables. That's risen about 3%. For 2022, now this is think government money. The federal government stepped in and they started saying, okay, the cost of living adjustments for Social Security, for government employees, they've also raised, right? 3%. That's nothing compared to what the inflation rate is. Whereas, like I said, restaurant owners are having to really bring those prices up way more, 10, 20, maybe even 30% more per hour just to get employees in. They say the adjustment lowers the amount of taxes deducted from paychecks, raising the take-home pay. So a lot of rules were made to where you could get more in your pocket. The problem is that when that happens, a lot of people aren't prepared with good, solid tax write-offs, and then they either get less at the end of the year in the form of a tax return, or they owe money. So that's something that I really want to warn people about, okay? It says, why isn't the factor even higher? One reason is that Congress changed the inflation measure in 2017 to one that's often slower for many provisions. In addition, the Internal Revenue Service figures for the year ended August 31st to figure the next year's tax tables, and inflation surged this fall. So it's funny, when they finished this, that the inflation really didn't start rearing its ugly head until the fall, until where we are now. It says a single filer with $80,000 of wages, no dependents, a simple return, and biweekly pay could soon see about an extra $5 per paycheck. So how do you feel about that? You feel like you're winning? I don't think so. Now, how about retirement savers? And I think this is really important. Many people contributing to tax-favored retirement plans, such as 401ks, IRAs, and Roth IRAs for 2022 will benefit from inflation. It's going to be funny. They're going to benefit from inflation adjustments that are higher than those of income tax, or that are higher than those for income tax brackets. That's in part because Congress's 2017 switched to a often lower inflation measure, as described above, doesn't apply to savings plan limits. The inflation adjustments for saving plans are also based on more recent data. I gotta be honest with you, it's really hard to read some of this stuff right now because my mind keeps spinning as you hear about these tables changing and stuff. And it's like I'm reading facts, right? This is what the government really does. But in the same time, my mind's spinning going, this isn't gonna work. And it's too little too late. It absolutely blows my mind. So we're gonna reach back to that one. Sorry. Let's do this. Man. Okay. Social Security recipients. This is what I really feel bad for. Higher inflation will boost Social Security benefits for 2022 by 5.9%, the most since 1982. I think this is total crap, to be honest with you. This is where my mind goes when I skip over words. Because in my mind, I have reality, and then here they have these are facts, but it's just not enough. 5.9% is not enough for Social Security recipients. The facts are the government is lying about its inflation numbers because it takes key metrics like energy and food out of it. And they might say they have it in there, but man, it's hard not to get frustrated at this crap. I'm sorry. If you agree with me, then share the video. I don't know what to say. It says, but higher inflation also raises taxes for many recipients. The income thresholds at 85% of Social Security payments become taxable, aren't inflation adjusted, and have been $44,000 for joint filing couples and $34,000 for single filers since 1994. So just that year, 1994, should show you how bad this is. Nothing costs the same today as it did in 1984. Everything is more expensive. Why? Because of the destruction of the currency, because it keeps getting printed like crazy. And I'm going to end right there, to be honest with you. I'm going to put this in the thing. Gosh, man. You need to protect yourselves. We need to protect ourselves with good inflation hedges. What are wealthy people doing? Elon Musk is buying gold with Tesla. He's buying Bitcoin. The wealthiest people like Ray Dalio say, cash is trash, right? Right now, you have to protect yourself. I mean, if you don't have a little bit extra food right now, let's say a 30-day to 3-month supply of canned goods, I'm not saying like a catastrophic earthquake, but just if, inflation explodes or the supply chain stops and you can't get food. I'm not joking. Like, this is the time to prepare. And I'm sorry, I read this stuff and it just fires me up. Once again, guys, if you haven't subscribed, if you would consider, that'd be awesome. But I'm going to link this below. But yes, inflation is going to affect your 2022 taxes. I can guarantee it. The Economic Ninja is out.